Stop scrolling because this tiny shift in the housing market could completely rewrite your financial future. After taking a big dip to 6.13% a month or so ago, mortgage rates are now holding steady between the 6.3% to 6.4% range for a 30-year fixed loan. Home prices, it varies by area, yet they're overall basically flat, up just 0.2% year over year, with forecasts from expert economists calling for only 0.4% appreciation through mid-2026. Inventory, it's been the highest we've seen since 2016, and that means buyers finally have options. In many zip codes, the market is moving from seller-controlled to more buyer-friendly. More inventory, slowing price growth, and lower steady rates are creating opportunities most people are sleeping on. So, is there still some volatility in the market? Yes, there is. With the Fed saying that inflation is still higher than their target, but they've been feeling a bit more nervous about the labor market. So we'll see what they decide to do when they meet as we approach the Halloween holiday. Given the latest jobs report that wasn't officially released and the government shutdown, which is why it wasn't released, it said that the chance is now extremely high, with 95% plus probability that another Fed's fund rate cut will be happening later this month. But do remember that any cuts by the Fed will make borrowing more affordable for credit cards, student loans, and car loans, but it is not a direct connection to the rates that affect mortgage rates for housing, which follows the yield of the 10-year Treasury. However, with the economic conditions that we're in, the market already has anticipated these cuts and influenced mortgage lenders to bake in their lower offers right now to the expected lowering rates. Some loan program options are actually even offering qualified individuals rates in the 5% range, and many potential home buyers don't know that. They're still waiting on the sidelines for the media headlines to tell them that mortgage rates have now come down. Although we saw a big bump up in the mortgage applications and home sales in August and September due to the drop in mortgage rates, it can still be a confusing real estate market. We have some homes that are sitting for over a month or so, needing price corrections, while others are flying off of the shelf with multiple offers and above asking amounts. Speaking of which, let's zoom in locally and take a look at what's happening right here in Long Beach, California. At the time of this recording, there were 235 active single-family home listings, 144 pending homes, most now with a longer days on market than what we've been seeing, and 30 sold homes so far this month, with 133 sold homes last month in September. The average list price was $1,160,068, and the average sold price was $1,206,455, and they were on the market for an average of 35 days. Back in September, about 45% of the total sold homes had found a buyer within 2 weeks, and sales commanded a 106.8% sales to list price ratio, meaning that sellers, on average, were receiving 6.8% more than they were asking for their homes. This just goes to show what a reduction in mortgage rates would translate to. More buyers in the market, more offers, more competition, and more being paid for homes in order to win. I wonder what will happen when rates finally do go even lower below that 6% threshold. Want to know how this market and where it's headed impacts you and your real estate goals? Message or call me today for a personalized market snapshot of your local area and a customized blueprint for your plan of action. I'm Stephanie Oliver with the Anderson Real Estate Group and eXp Realty, and my top producing team and I will show you exactly how to play this market to win. See you on my next video.